Here is something almost every retiree in America believes, and it is completely wrong. Most people think that Medicare charges everyone the same premium, and that what you pay this year is based on what you make this year. Wrong. Flat out wrong. The truth is that Medicare can reach back in time, pull up a tax return you filed years ago, and use that old number to decide what you pay right now. In 2026, the premium you are being charged is not based on your 2026 income at all. It is based on the tax return you filed for the year 2024, 2 full years ago. And if you do not understand how that works, it can quietly cost you thousands of dollars a year for something you could have fixed. I want you to really sit with that, because it turns everything you assumed upside down. You could be retired right now, living on a fraction of what you used to earn, and still be charged a high-income Medicare penalty based on a year when you were still working, or a year when you sold a house, or a year when you took one big withdrawal from a retirement account. Medicare does not automatically know your income dropped. It just looks at that old return and sends you the bill. This surcharge even has a name that almost nobody recognizes. It is called IRMAA. And the myth that Medicare costs the same for everyone is exactly why most people never see it coming. So where does this myth come from, and who benefits from you believing it? Let me be honest with you about how this actually works. Nobody sat down and decided to hide this from you on purpose. But the system is built in a way that keeps you in the dark, and it quietly benefits from your silence. Here is the design flaw. Social Security and Medicare use the most recent tax data the IRS has on file, and because tax returns take time to process, the freshest complete data they can rely on is always about 2 years old. So the 2-year look-back is not a scandal. It is a bureaucratic default. But defaults have consequences. The reason this myth survives is that the people who could correct it have no reason to. Medicare is not going to run an ad campaign telling you how to lower your own premium. The letter you receive announcing your surcharge does mention that you can appeal it, but it is buried in dense language that most people skim past. And here is the part that really keeps the myth alive. The surcharge comes straight out of your Social Security check before you ever see the money. When a cost is invisible, you do not fight it. Millions of retirees are paying more every single month and have simply accepted it as normal because nobody ever told them the number was based on an old snapshot that no longer describes their life. And there is a second quiet beneficiary here, which is inertia itself. Every year that you do not question your premium, the system keeps running exactly as it is. There is no penalty to Medicare for you overpaying. The burden of proof is entirely on you. You have to be the one who notices, the one who does the math, the one who fills out the form. If you wait for someone to knock on your door and offer you a refund, you will wait forever. That is the machinery behind the myth, and once you see it, you cannot unsee it. So, let me tell you why I know this so well. My name is Emma Smith, and I am a state bar licensed estate attorney, 15 plus years. I have spent years helping people over 60 navigate exactly these kinds of hidden costs, the ones that hide in plain sight inside government programs that were supposed to protect you. And I can tell you that this 2-year look-back rule is one of the single most misunderstood things in all of Medicare. I have watched people who did everything right, who saved carefully and retired responsibly, get hit with premiums hundreds of dollars higher than they needed to pay, all because of a rule they were never taught. Let me also be completely straight with you about my angle here, because you deserve to know it. I do not sell Medicare plans. I am not an insurance agent, and I do not earn a commission if you switch anything. I do not make a dime from whether you appeal your premium or not. Everything I am going to show you today comes from official sources, the Centers for Medicare and Medicaid Services and the Social Security Administration, and I will list every one of them so you can check the numbers yourself. Because Medicare decisions are personal and the dollars are real, please also confirm your own situation directly with Social Security or a licensed advisor before you act. My job is only to tear down the myth and hand you the truth underneath it, and that truth has layers. So let us start peeling. Layer 1 of this myth is the simplest and the most important. The belief is that Medicare looks at your current income. The truth is that Medicare looks at your income from 2 years ago. For your 2026 premiums, Social Security pulls your 2024 tax return, specifically your modified adjusted gross income. That is your adjusted gross income plus a few things added back in, like tax-exempt interest. If that 2-year-old number crosses a line, you pay more. If it stays under the line, you pay the standard amount. Let me give you the actual 2026 numbers so this stops being abstract. In 2026, the standard Medicare Part B premium is $202.90 a month. That is what most people pay. But if you are single and your 2024 income was above $109,000, or if you are married filing jointly and your combined 2024 income was above $218,000, you get bumped into a higher bracket and your premium goes up. It does not go up a little. At the very first tier above the line, your Part B premium jumps to $284.10 a month. That is roughly $81 more every single month per person. Now think about what that means over a year. $81 a month is nearly $1,000 a year in extra premiums for one person, just for landing $1 over that first threshold. For a married couple where both spouses are on Medicare and both cross the line, you double it. And remember, this is based on 2024, a year that may have nothing to do with your life today. Read that again if you need to. The premium is real, the number is current, and the trigger is a tax return you probably forgot you even filed. That is layer 1. Layer 2 is worse. The second layer of the myth is that people who do know about IRMAA think it only touches one premium. They picture a single surcharge on their Part B and assume that is the whole story. It is not. The same 2-year-old income number also drives a separate surcharge on your Part D prescription drug coverage. So you are not getting hit once. You are getting hit twice on 2 different premiums from the same old tax return. Here are the real 2026 Part D numbers so you can see the stack. If your 2024 income crossed that first line, 109,000 single or 218,000 married, you pay an extra $14.50 a month on top of whatever your drug plan already costs. Move up a bracket, and it becomes $37.50. Higher still, and it is $60.40, then $83.30. And at the very top, it reaches $91 a month, purely as a surcharge, before you have paid a penny of your actual plan premium. Now, let me introduce you to a real kind of person this happens to. Picture a woman named Corinne, 67, living in Scottsdale, Arizona. Corinne retired in 2025, but back in 2024, she was still working part-time, and she also sold some stock to help pay off her mortgage. That pushed her 2024 income just over the first threshold. Today, in 2026, Corinne lives on Social Security and a modest pension, but Medicare is charging her the higher Part B premium and the Part D surcharge based on that 2024 spike. She is paying close to $100 more a month than her actual current life would justify. And here is the trap. Corinne assumed there was nothing she could do. That belief is layer 3, and it is the most expensive lie of all. Layer 3 is the belief that once Medicare sends you that higher bill, you are simply stuck with it, that the number is final, that fighting the federal government is pointless. This is the lie that costs people the most, because it is the one that stops them from acting. And it is completely false. There is a specific official process to challenge an IRMAA surcharge when your income has genuinely dropped, and it works. But almost nobody uses it, because almost nobody knows it exists. The key that unlocks this is a concept called a life-changing event. Social Security recognizes that a 2-year-old tax return can be badly out of date, so it built in a way to update your premium based on your real current situation. The qualifying life-changing events include things like retirement, which Social Security calls work stoppage or work reduction, the death of a spouse, marriage, divorce, the loss of a pension, or the loss of income-producing property. If one of these applies to you, you have a legitimate right to ask Medicare to look at your current income instead of that old snapshot. This is where the core message of everything I teach comes in, and I need you to hear it clearly. Being eligible for a lower premium and actually receiving a lower premium are 2 completely different things. Corinne, in my example, qualified for relief the moment she retired. But qualifying did nothing on its own. Nobody at Social Security called her to say, "We noticed you retired, we will lower your premium." The reduction only happens when you claim it. You have to file the request. If you sit and wait, the higher premium keeps coming out of your check month after month, even though you had the right to stop it. Eligibility is not receiving. You must claim it. And here is the exact tool. The form is called the SSA 44. Its full title is Medicare Income-Related Monthly Adjustment Amount Life-Changing Event. It is a free form, available directly from the Social Security Administration. On it, you check the box for the event that applies to you, you report your reduced current year income, and you attach proof, like a letter from your former employer confirming your retirement date, or a death certificate, or a signed statement. That single form is what tells Medicare to stop looking at 2024 and start looking at the life you are actually living now. But there is one more layer under all of this, and it is the one that catches even careful people. Layer 4 is the subtle one, the trap underneath the trap. Many people who get hit with IRMAA were not high income at all. They had one single year with an unusual spike, and that one year distorted everything. This happens constantly with retirees, and I want you to recognize the warning signs so you are never blindsided. A one-time event in your tax return can quietly push you over the line even when your normal income is nowhere near it. Let me give you the common culprits because these are the ones that ambush good savers. Selling a home that gained a lot of value, where the profit exceeds the exclusion, can spike your income for that year. Doing a large Roth conversion, moving money from a traditional retirement account into a Roth, counts as income in the year you do it. Taking one big withdrawal from a retirement account to cover a medical bill or a new roof does the same thing. Even inheriting and cashing out certain accounts can do it. None of these mean you are wealthy. They mean you had one lumpy year. And Medicare, looking back 2 years later, cannot tell the difference on its own. Here is the piece of this layer that actually brings good news, so pay attention. Because IRMAA is recalculated every single year, a one-time spike is usually temporary. If your 2024 income was inflated by a home sale and your 2025 income drops back to normal, then your 2027 premium, which will be based on that normal 2025 return, should fall back down automatically. So part of the fix is simply understanding the timeline and not panicking. But the other part is knowing that if the spike was caused by a genuine life-changing event, you may not have to wait 2 years for relief. You may be able to fix it now with that SSA 44. Knowing which situation you are in is the difference between overpaying for a year and overpaying for nothing at all. Let me make this concrete with a second person. Picture a couple, Desmond and Lorraine, both 70, living outside Raleigh, North Carolina. In 2024, they sold their longtime family home and downsized, and the gain pushed their income over the second bracket for that 1 year. In 2026, they are being charged a much higher Part B premium, over $400 a month each, plus the Part D surcharge, all from that single home sale. Now, a home sale by itself is not on the official life-changing event list, so they may not be able to appeal that particular spike. But because their normal income is modest, their premium should self-correct in a couple of years once the recent low-income returns cycle through. Understanding that saved them from making a panicked wrong decision. That is layer 4. The fifth and final layer is the one that turns knowledge into money, and it is about timing and the correct path. Most people who finally learn all of this still make one last mistake. They assume there is unlimited time to deal with it. There is not. When Social Security sends you that initial determination letter announcing your surcharge, you generally have 60 days from receiving that notice to file a formal appeal called a request for reconsideration. Miss that window and you make your life harder, though the annual recalculation and the SSA 44 route may still help you. So let me separate the two paths clearly, because confusing them is how people waste months. Path 1 is the appeal, or reconsideration, and you use it when the information Medicare used was wrong, or when you believe they made a mistake, like using an outdated or amended return. Path 2 is the SSA 44 life-changing event request, and you use it when the old return was correct at the time, but your income has since dropped because of retirement, a spouse's death, divorce, or the other qualifying events. Same goal, lower premium, but two different doors. Walking through the right door the first time can save you a great deal of back and forth. And here is a crucial detail almost nobody knows, so write it down. If you filed an amended tax return that shows lower income, or if the IRS corrected your return, you can ask Social Security to update your IRMAA to reflect that. You do that by contacting Social Security directly at their main number, 1-800-772-1213. So even outside the NEAT categories, if the number Medicare is using is simply wrong, you have a way to say so. The myth that you are powerless is dead. You are not powerless. You have forms, you have deadlines, and you have official rights, and now you know all 5 layers. So what does all of this actually mean for your money in 2026? Let me put real numbers in front of you. If you are a single retiree and your 2024 income landed just $1 over $109,000, you moved from paying $202.90 a month to $284.10 a month for Part B. That is about $970 a year in extra premiums, plus another $174 a year from the Part D surcharge. So roughly $1,100 a year from crossing a line by a single dollar. Now climb the brackets, because the higher tiers are where it gets genuinely painful. At the top full brackets in 2026, the Part B premium reaches $689.90 a month. Compare that to the standard $202.90, and you are looking at a difference of nearly $587 a month per person. Over a year, that is around $7,000 in extra premiums for one person, and if a couple is both in that bracket, it can approach $14,000 a year. That is the size of the number sitting inside a myth that most people never question. Here is the truth stated plainly. If your income today does not match your income from 2024, and especially if 2024 was distorted by a one-time event, or if you have since had a genuine life-changing event, then the amount Medicare is charging you in 2026 may be flatly wrong for your real situation. And the money is not small. For many people, this is the single largest fixable expense in their entire retirement budget. This is not about pennies. This is potentially thousands of dollars a year that you can keep, but only if you act on the truth instead of the myth. So let us turn the truth into action. Step 1, before anything else, go find the letter. Social Security sends an initial determination notice when they place you in a higher IRMAA bracket. Dig it out of your files or your email. That letter tells you which bracket they put you in, and, critically, it starts the clock on your 60-day appeal window. If you cannot find it, you can see your Medicare premium details and messages in your online Social Security account at ssa.gov, or you can call them directly. Step 2, do the honest math. Pull your 2024 tax return and look at your modified adjusted gross income. Ask yourself 2 questions. First, was 2024 a normal year for me, or was it inflated by something unusual like a home sale, a Roth conversion, or a one-time withdrawal? Second, has my income genuinely dropped since then because of retirement, a spouse's passing, divorce, or a lost pension? Your answers tell you which door to walk through. A normal but now lower income points you toward the SSA 44. A wrong or amended number points you toward a reconsideration or a direct call. Step 3, file the right form. If you had a qualifying life-changing event, download Form SSA-44 directly from ssa.gov. Fill it out. Check the box for your event, report your estimated current year income, and attach your proof. You can mail it, bring it to your local Social Security office, or upload it through Social Security's website. If instead the issue is a wrong or amended return, call Social Security at 1-800-772-1213 and request a reconsideration and be ready to send documentation. Whatever you do it inside that 60-day window if you can, and keep a copy of everything you submit. Step 4, and please do not skip this one. Because this involves your specific tax numbers and your specific eligibility, verify your plan with a licensed professional or directly with the Social Security Administration before you file. A tax advisor can tell you whether a Roth conversion this year might accidentally push you into a higher bracket 2 years from now, which is real forward planning that can save you thousands. The forms are free, the process is official, and the potential savings are large. But the details are yours alone, so confirm them against your own return. Now, I know I just threw a lot of numbers, brackets, and form names at you, and I do not expect anyone to memorize all of that. So I made you a free tool. I put together a one-page IRMAA Truth Sheet that lays out everything from this video in plain language. It has the 2026 income thresholds for single and married filers, the standard premium versus each higher bracket, the 2 appeal paths side by side, the SSA 44 checklist of qualifying life-changing events, and the 60-day deadline printed right at the top so you cannot miss it. You can download it completely free at the link below this video at lead magnet URL. There is no charge and nothing to buy. I told you at the start that I do not make a dime from any of this, and I meant it. This sheet exists for one reason, so that when you sit down at the kitchen table to check your own premium or when you call Social Security, you have the whole picture on one page in front of you. Print it, mark it up, and take it with you. And remember, it is a starting point to organize your thinking, not a substitute for confirming your own numbers with an official source. Now, here is what I want you to do with what you just learned, and I am going to be direct about it. This myth has been quietly costing retirees money for years, precisely because nobody talks about it out loud. So talk about it out loud. Share this video with every person you know who is on Medicare or about to be. Do not let one more friend keep paying a high income penalty on an income they no longer have. That is exactly the silence the system counts on, and you can break it with one tap. Think of the people in your life who did everything right and would never in a million years guess that a tax return from 2024 is setting their premium today. Your brother who just retired, the couple next door who just sold their house, the widow at your church who is almost certainly still being charged as if her late husband's income were still coming in. Send it to them and say, watch this before you pay another Medicare bill. You are not being pushy. You are handing them the truth that the letter in their drawer never spelled out. Refuse to let good people overpay out of ignorance. That is the whole point. And if you are the kind of person who would rather know the truth than believe the comfortable myth, then subscribe and turn on the bell, because that is exactly the kind of thing I do on this channel. I take the rules that quietly drain your retirement, the ones hiding inside Medicare, Social Security, and the tax code, and I tear them open so you can see how they really work and keep more of your own money. There is always another myth to bust and another dollar to save. So check your own premium this week, share this with someone who needs to hear it, and I will see you in the next one. Stay sharp, question the bill, and take good care of yourself.